Are you still trying to figure out how your 401k works? Let's dive in. 401k is the primary savings vehicle that most Americans are utilizing for retirement. Now, most people that are saving this way do it on a tax-deferred basis. What does tax-deferred mean? It means that your company is allowing you to go directly into your 401k from your paycheck and forego having to pay taxes on that money now, which is giving you a savings today. But what happens on the back end? On the back end, you're going to have to pay taxes on the way out. So you're going to compound and accumulate all that money all these years, whatever you're contributing, and if your employer has a match, whatever they're contributing. And the question that I want you to consider or ask yourself is, what will the future tax rates be? If you look at the massive amount of debt on our country, we can only safely assume that in the future, the tax rates will be much higher than they are today. Now, that's a gamble that I'm not myself looking to take. So what's a way that we can avoid that? How do we make sure that we're allocated properly inside of this major investment vehicle? Well, you want to go to your company or your HR and ask if they have a Roth option. What that will allow you to do is save the money on a tax-free basis. All the accumulation and the growth that you'll have going forward into the future is going to be post-tax, meaning you're not getting an upfront tax break, but at the end of the day, you're allowing that money to compound over a long period of time, and Uncle Sam won't be able to reach into your pocket. So let's really think about this. If we're growing our 401k tax deferred, and we look out into the future when we're going to be able to need to take the money out, you're going to be hit with what's called an RMD, or a required minimum distribution. So what does that mean? That means that the government knows more or less, or expects to know, when you're going to die. And they want to make sure that that account that you worked so hard to save for your entire life is depleted by the time you die, so that they can get their tax money from you. That's what will occur in all tax deferred vehicles, whether it be a traditional IRA or whether it be just your standard 401k. So understand, the way to circumvent that is a shift into the Roth option, whether it's a Roth IRA as an individual or whether you make that modification inside your 401k through your employer. Now keep in mind, this is not any sort of investment advice whatsoever. I don't know you, okay? If you have someone that you're working with, such as a financial advisor, they're gonna know your specific situation and they'll be able to advise you that way. This material is for educational purposes only. I really wanted people to understand the difference between how your tax-deferred situation versus your tax-free situation is going to be able to benefit you in the long run. Lastly, your Roth, you would never have a required minimum distribution, which means that if you just want to continually accumulate inside of that account, so long as you have earned income, basically making income from a paycheck, then you're allowed to do so. Really hope you enjoyed my content. Subscribe if you found value in what we talked about today. Thank you.